The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Now, the author of The Path of Least Resistance and the Tech Insider, David White.
And it's a beautiful December 10th at the headquarters of Technical Trading and Investing, TFNN.com, he said. And just another beautiful day, a little overcast. Guess we can't have every day sunny down here in 80, so it's cloudy in 70. But still a beautiful day. Always a wonderful day to drive across the bay, look at the water, look at some of the seagulls. What can you say? Every day above ground's a good day. Anyway, today in the headlines, I'm going to start picking wonderful little headlines to start the day off with. The one we have here today is starvation can lead to health hazards. I wonder what kind of health hazard you'd have if you starved to death. Well, seems to be one of those Captain Obvious headlines, but still one of the ones I like the best out here. But we're going to try to get in the news here pretty quick. I wanted to just touch on the market since we've had yet another test of the, trying to break these highs. 1421 for the high in the S&P is pretty good. But what we don't have is any volume. 1.85 billion shares so far. Anything, if we start this show and we don't have 2.4 billion shares, it is going to be a fairly light day. We've got some reasons for that. We'll get into it in a minute, but still up here on very light volume. Saw some stocks. We've got a lot of stocks short in my newsletter, in the daily newsletter, The Path of Least Resistance. Some of them actually kind of coming off the rails today, so we're pretty happy about that, but still not getting the kind of volume that I would love to see just yet. In fact, I'm kind of wrestling with taking some money on one, and up about 10% on the short, and it's off 4% today. So I'm going to be watching it here. But is the volume great? No. Could it drift lower? Yes. But this one's probably coming in. We may discuss it if I cover it here before the end of the day. But you know, we've got a market where everybody's talking about QE4 already. Boy, I think I just threw up a little bit in my mouth right there. QE4, QE5, son of QE6, the son of QE7, the granddaughter of QE9. It just seems like we're going to go on and on and on. And I guess as long as you have more money to throw at a problem, you can never say you failed. But I have a sneaking sensation when you get to QE5, 6, 7, 8, 9, and the son of grandson of QE10, at one point someone has to say something isn't quite working out there. But that's kind of a little bit of the discussion out there. Of course, a little fiscal cliff action. Not the biggest thing I saw out there. In fact, I couldn't find this anywhere on Wall Street today, and I think it is the biggest news that has come out in a long time for at least Apple. On Friday night, I tweeted it out to both my Path and Path of Least Resistance and Tech Insider because I thought it was so big. And that is for the second time in 2 months, the United States Patent and Trademark Office has issued a first office action tentatively declaring the key Apple multi-touch patent invalid. So what happens, this one's actually the patent, a lot of people call it the Steve Jobs patent. It has basically all the stuff that was supposed to be put in for the iPod. A lot of the stuff moves around. Now, anybody that's listened to this show, I think I made a proclamation that I thought that there was a 99.5% chance that Samsung patent deal was going right out and totally going to be thrown away. This is going to be awful tough now for Apple to go back in to proceedings that are happening actually today and start saying why they shouldn't get a new court case when basically the U.S. is saying that they're throwing this out. There are a few reasons why, and most people don't understand patents. Most people have never applied for patents. I have, or at least the company I work for had. And I actually have a few patents out there floating around under my name, I think. Maybe, maybe not. They all get kind of tossed around and renamed after time sometimes. But what we have here is, this is the, what would you call it? The crown jewels of Apple's patents for all the multi-touch stuff. But early on, it was ridiculous to think that Apple had a claim for multi-touch, because in the, I think it was the 2001-2002 movie that Spielberg did called, what was it, Minority Report, actually a make of a short, well, I don't know if you call it a novella, but it was a, I think it was a Philip K. Dick book, and in the movie, basically, it's all about some sci-fi stuff. But in the movie, they hired the movie producer, I think Spielberg, hired a futurist to make up an interface that would float in air on kind of like on plexiglass panels, and they would move things around. Well, that was like in 2001 he hired this guy. Examples of that kind of interface where you move things by touching multiple times on an interface have been around a lot sooner than Apple actually ever applied for these patents. I thought that they were bogus to begin with. And I think we're probably finding how poor our patent office actually works. Also how really stupid a lot of the judges are. It's called prior art. It doesn't mean if it was in a movie that you can't apply it. And, you know, if it was obvious, if someone showed how to do it, if it was in a movie, it was in a movie. If it was on the back of a napkin, it doesn't matter. If someone else came up with it, if you can prove that someone else came up with it before it ever happened, you can't get a patent. Also, if you can go around the patent, let's say that there's 5 processes like baking a cake, but you have to start off with whipping the eggs. Well, if you find some way to make whipping the eggs the last step in the process, you've gotten around their particular patent. You have to say, I have to do this, 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 and this. So let's say that you have to put both fingers down at the same time, but I put my finger down one place and then on another place, and then I do a multi-touch thing. Well, you've gone around the patent. Patents tend to only work when you can do something only one way whatsoever. And there's 1,000 ways to come around these patents. There always is. There are some patents that are extremely broad. There are some patents that are incredibly weak. And I continue to think that this is some of the weakest patents that are out there, especially because of what's happening out here. Anyway, not a squeak about Apple's patents today at all getting tentatively invalidated. But my guess is that everybody's finally figured this out. Everybody started to complain. And probably within, I would imagine, the next 6 months, we're going to see these all these patents go away for Apple's and the Steve Jobs 20 claims patent. There's actually a long patent number. You can Google for it. But just kind of amazing that we haven't seen anything moving out there. We do have an early phone caller, even before I begged for some phone calls, and that's Garo in Alaska. How you doing today, Garo?
How are you, sir?
Good.
Right. Calling regarding Apache APA. Where do you think I can get in to go long?
Well, I tell you what, I'm going to wait until gasoline quits falling. I just saw it at $3.04 on my way out here today.
Right.
Would you think that you would want both crude and gasoline prices to start strengthening before you go long, or do you think you'd probably just buy it and hope that it went up?
What I think gasoline price has nothing to do with oil company, the stocks. That stock is the stock has to do its job, regardless what the price of gasoline is.
No, well,
that's my approach, of course.
Okay.
Yeah.
Okay, I would say that, unfortunately, almost all of these are in some kind of ETF, and that would be great, but unfortunately there's an ETF, and that ETF may have gasoline companies like Valero in it. Okay, so now you start getting weakness in that sector. The weakness comes along for Apache also. My model has always been 50% of the stock movement has to do with the broad markets, about 25% of the sector, and about 25% part of the stock. So you may have 25% of the trade in here in a chart that I will grant you does not look bad.
Right.
I want to see some kind of test of about $82, $82.50 before I would be in this sector. And I think that's more of a sector call than it is a broad market call or anything else. But I continue to think we're probably going to see crude around 82.5 is the next test. And if it would strengthen on then maybe you have the strength in that sector to go long. But my problem would be I see basically gasoline prices starting to really come down quickly, and that generally is a big problem of oversupply. And when you get into oversupply, you start looking at Apache, which produces natural gas, crude oil, natural gas liquids, and has a big exploration part in its business. And what happens when there's an oversupply? You quit drilling. So I'm going to say on a sector call, I like the chart. I understand what you're looking at here. The big problem I see is just how tough it's going to be to get over the sector weaknesses out here. Now maybe we get some kind of test in the next day or two. What do we got here out here? You've got a beautiful low out here, but I'm going to suspect that this thing doesn't have what you need to go long from both the market perspective and the fact that, as far as I can tell, that sector is weak too. Trying to think. First thing I would do on this one is look at OIH and take a look at that.
But Mr. David, Apache, it is not in OIH. Chevron and Exxon and Conoco and these companies are in OIH. Apache, OIS, Schlumberger, and so on, some of them are not in OIS. So the movement of OIS has nothing to do with Apache.
I would argue the point that it does. I'm going to say if gas prices and crude prices go down, that any company involved in producing it or exploring for it will also suffer.
I called you on November the 27th.
Mm-hmm. You want to hang on through the break?
Yes, I'll wait, sir.
Okay.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
Happy holidays from TFNN. Our most rewarding Tiger Dollar sale is back this December at TFNN. Normally, we offer only a 10 to 20% bonus on Tiger Dollar purchases, but through December 19th only, when you purchase Tiger Dollars to spend on any of our products, you get a 25% bonus on your purchase, and up to 10% of whatever you spend will be donated to the Salvation Army in your name. You'll receive a personalized thank you letter directly from our local Clearwater Salvation Army administrator in appreciation of your donation. Tiger Dollars can be used on any of our newsletters or subscriptions, never expire, and are fully transferable. Take advantage of our most rewarding Tiger Dollar sale of the year right now. Visit TFNN.com for all the details and to make your purchase today. Happy holidays from TFNN.
This segment is brought to you by Gold Fields. For more information, just click the Gold Fields banner on the front page of TFNN.com.
And we were talking with Agaro from Alaska, if he's still there.
Yes, sir.
Okay. Now, what I did was look up real quick on Yahoo the direct competitors to Apache. I've got Apache, of course. I've got APC, which is Anadarko. We've got BP, and we've got XOM, which is ExxonMobil. Now, I'm going to go through each one of these charts because this will give us a little better idea of how that whole sector is looking. But when we look at Apache, probably the best of the bunch out here, it is testing a previous, or getting close to testing a previous low out here, the November 16th low with 5.3 million shares. We've got about 2.8 million shares. So it needs to get, what was the low out here today? 74.70. So you still have about 20 cents lower to go. Maybe you'll get that test tomorrow on lighter volume. That would be a buy on that one particular stock. But if I go back and look at APC, I've got a very decent looking sell signal on Anadarko. It has gone with 3 successive highs out here, each with lighter volume. The first high was July 18th with 6.8 million shares at 74.13. Went to a higher high and failed on September 14th at 5.9 million shares. And then we've got a higher high out here on December 7th with 4.2 million shares. And is the energy really horrible? No, but it certainly looks to me more like a topping pattern. Then we go into British Petroleum. To me, if I looked at this chart just instantly, I'd think that this looked more like an ABC down than it did an ABC up. And, you know, could it come back and fill this gap around $40 to $48.50? I think before I would trade it, I would. And then XOM, we look on it, it came down on huge volume, no, but it's kind of found its way out here sideways. I would much rather see a test of the $85.06 November 16th low before I would go long this thing. It did come down on a little bit of volume on 11.7, but I just don't see anything out here in this sector that really tells me anything. And when I see gasolines continue to fall out here and people willing to do price wars on gasoline, that to me makes me very nervous about being long any kind of energy production right now.
Okay, some like APC, it went up so much. How come the price of gasoline didn't affect on APC? Here I can give you a chart. SD, Sam David.
Mm-hmm.
It came with a very bad news on November the 8th. It went down 38 cents per price per earning. Mm-hmm. It went down all the way to $4.81. It hit the bottom of November the 5th, 2010 at $4.85 with 68 million shares, and it went up all the way to $7.20.
Yeah, I don't want to get in an argument with you, but what I would say,
it's not argument. It's not an argument. This is a debate that you're telling that the price of gas has to do with the oil company stock.
It does. Over time you will find that it does, even though it may break for a short period. But you know what we have is at least in my mind, is a market where 50% of it is the direction of the broad market, 25% is the sector, and 25% is the stock. I will grant you that you have one of the better looking stocks that looks like it could bottom. What I don't see is a market that really makes me think that there's some kind of incredible strength or a bottom in the energy sector stocks that we looked at. And two, I don't see anything that says we're going up higher in this market. In fact, what I see is extremely light volume back up here at the top. So I would say, you know, my argument would be 75% of the trade is going against you being long in that market right now, at least in the oil sector. So could you win on this trade? Yes, I would say the odds are against you, and that would be my argument. And as long as gasoline has it pretty much works with supply and demand, and as long as I see and continue to see gasoline prices drop precipitously, I suspect that there's more than enough supply that will hurt both production companies and exploration companies. So that would be my argument. I want to thank you for the call, Garo. We're going to go back to the news. Okay, we'll find out what happens over the next 2 weeks. I just don't see a whole lot in that sector right now. I think that there's better sectors that you can probably make better money on right now. Could you go down and test $82 in crude? If you did and it held, did a good job, maybe I might be looking long crude. Right now, looks awful tough to me. We'll be back in just a minute.
You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
And as we come back, we've got another caller here. So we're going to go right to them. If I can figure out how to actually move this thing around. Where's it at here? It's got a little tab thing on this thing. But we've got Mohammed from Glendale. How are you doing, Mohammed?
Good. How are you doing, David?
Good.
Great. I was wondering if you could take a peek at POL and see if there's any good entry price for it.
Yeah, like about 1750. This thing's going to come back to that sign of strength that it had on, let me zoom in on this, on October 24th. It popped up fairly decently on 5 million shares, and you're going to find pretty much support right back in that $17 range is the only good risk reward to go back and buy this.
Great. And any time frame that you would see it go down to those levels?
I tell you what, I'm short and making lots of money. I don't see right now. In fact, during the break I just covered a short on UA. Under Armour made $5 or a little over $5 on the thing. So I'm. Oh, wow. To me, there are a ton of them out here that look better than this. This is you almost got the retrace you needed back to 1841 on this, but you're going to need it back in 17. I just don't see a lot of strength in this market here. In fact, a lot of the stocks that I've had short, they've been up here on just vapor volume that they're breaking today. I'm going to go through the ones that I've got here short and just give you how much they're down today. 1.7% on one. I've got another one down. UA is down 4.5%. I just covered that. I've got another one down 3.3%. I got a couple that are up about my entry point, and one that's maybe a dollar higher than my entry point. But I mean, there's a lot of stocks out here still falling apart. I haven't made any money on my index play, but all the rest of them, I'm finding a lot of stocks that are falling down rather significantly. So, I'm thinking right now, I would rather be short than long any of these, but I'm thinking that if you get a blowout in January, that's at least what I'm looking for, that you could find some fairly decent buys maybe by February. But I think probably first 6 weeks of the year may be a great time to continue to be short. Because I think we're going to go from this transition from low tax rates to high tax rates, no matter what anybody says. We know that Europe's in recession. The bounce in China, they were down like 3%. They were up like 0.2%. Everybody's jumping up and down saying that we're saved because China's up 0.2% on its GDP number. I just don't see it. So maybe when some of those numbers turn around, I'm going to be a lot happier. But I'm fairly bearish right now and starting to take money on some of my shorts.
Okay. Well, thank you so much, David.
Okay. In fact, let's talk about that because I think this is one of the better looking shorts, although I could see some arguments on probably why I wouldn't be taking my money here. We went short in the path of least resistance at $50 or better. It got up to $55.20. But you could see this saying exactly what it was doing. It was coming into the down volume of the 25th of October. That day you had almost 7 million shares. We got into this, and I think it was midday, late day. I went ahead, or maybe it was even at the beginning of the day, and just said, if this thing gets to $55, I want to short it. But it had been very light volume. So it tests at almost 7 million shares with about 1.7 million shares that day. But we had a sell order in, or a short order in, for $55 or better. It's come back down into these lows, and we're into this candle I was hoping for more. I thought this may be an ABC down. But just a test of the previous lows out here doesn't look all that bad. 2.8 million shares. We got about 1.78, something like that. 1.5 million shares on that. So I'll go ahead and take my money out here. But, there's a lot of these stocks are making at least very decent ABC down signals, a lot more than I see anything looking like an ABC up. But you can really see that the volume came off about 60%. Or at least the energy came off 60% on this move back up to fill the heavy volume gap down day. And, pretty good indication you were going to have at least a test of that November 9th low. Got a little bit more down on it, but it's always important to sell when you can, not when you have to. And, if we had more volume down here, could you still get down to 48.90? Yeah, but I'm not going to wait too much. I've got some other positions out here, and I'm not bad about taking money on these. I would like a lot more. Maybe we'll get another opportunity to short this again. But it's been fairly weak out here. Just should have had higher volume. Probably a good sign that this thing may go sideways for a while. So we'll look at some other ones. Again, you can give me a call also at 877-927-6648. But nice $5 off this, and not so many more trading days. So nice quick trade out there and high probability. It had everything set up, higher volume low that needs to be tested, or at least retested out there at 48.90 and no volume. So, and it's into that candle. So we'll go ahead and take our money there. But let's see. Oh, I wanted to get back to the end of my Apple discussion. I think a lot of people have just whistled past the graveyard on this Apple patent business. Of course, they've stirred up all the hornets in the world now, and they're going to see some of their strongest patents invalidated. Patents are basically copyrights for inventions. and it has to be a new and useful process, machine, manufacture, or composition of matter, or any new and useful improvement thereof. You can't design the look and feel of it. Those look and feel patents got blown out in the 90s when a lot of people believed that they would actually continue to be viable. Look and feel meant that you couldn't make a program that kind of looked like mine. That went through in the 80s and was blown out in the 90s. Patents have to be a lot more practical than most people think. And eventually, over time, they eventually get tossed out if they're probably not worth the paper they're printed on, like Apple's. But I think now that Apple's fired up this giant engine of patent wars, they may, I think that they're going to rue the day that they ever started this whole patent war thing. Anyway, we talked about prior art and everything in there. Oh, other things in the news here. Apple's 8.9-inch HD Fire. Probably, what's Amazon off? 1.5%, 1.6%, something like that now. Amazon is offering a 50% discount on its 8.9-inch model of its Kindle Fire HD for a limited time. You have to put in a promotional code, but normally $300, $250 for a 9-inch tablet. It's probably losing them probably 10 or 15 bucks. I haven't found the exact buyout on this. I'm going to look at for tonight. But I think we're starting to see the beginnings of some price wars, not only in gasoline, but in tablets. I'm not a big fan of Amazon's. At $300, I'd still buy Google's Nexus 7. But a lot of people won't know the difference, won't really spend a lot of time figuring out, and will buy Amazon's product. But Amazon's probably gone from selling at cost to actually selling at a loss, at least with this discount today. And I think probably some people are a little nervous about that too. Amazon had been up on very light volume the last few days, printing off about $249 right now. We are going to have a bunch of IPOs this week, or at least they're going to try to have some. What we've noticed over the last few weeks is less than about 50% of these actually making it out the door. This week we've got Audio Oncology, AURX, going to try to raise $49 million. A lot of these, again, just tiny things, probably not worth looking at too hard. CIS Acquisition, and this is a Russian one, probably a fraud, my guess. CISAU, PBF Energy, the fifth largest U.S. independent refinery, backed by Blackstone and First Revenue. Again, you have to worry about all the additional shares that will eventually come out in these bigger IPOs. They're trying to raise $429 million by offering 16 million shares, somewhere between $25, $27. Silver Bay Realty Trust, SBY, new organized REIT to form single family properties in the U.S. Hey, they're trying to go up against TFNN. And how dare they? Trying to raise $250 million by offering 13.3 million shares, somewhere between 18 and 20 bucks. Solar City leases and installs solar energy systems. I just can't see why anybody would want to be in this business. $141 million, 10.1 million shares. Until you have an entire system that works for the at least equal price of what local electricity is going to cost you, this seems like a bad business to be in. Today we see A123 go bankrupt. The Chinese are buying it out for basically the money we gave them. It wasn't even a loan. This was in one of these other fiascos in green energy where we gave them $250 million. The only benefit is that they didn't spend all the $250 million before they knew they were going broke. We're going to probably get 50, 60 million back on that. But another one of these green energy companies that yet, just like Groupon or some of these other companies, don't have a business model that makes the money yet. QE4, of course, on Wednesday, Federal Reserve will announce its latest decision on monetary policy, followed by a press conference featuring our squeezably soft Charman Bernanke. But what can we say about that I haven't already said? Again, he's going to, everybody's talking at least about him talking about QE4. To me, I just don't know. Market really hasn't reacted to any of this. Makes me continue to think we'll see just probably nothing on this. I think it's now in the hands of our elected officials, not our appointed officials, like Federal Chairman Ben Bernanke. But we'll see. Anyway, I wanted to get through some of that stuff. Let's see. We did. Now, what else do we have out here in charts that we want to be watching? Let's take a quick look at Apple. Not that I'm so interested in trading it. Was weaker out here this morning, but we continue to see a stock, a PPL. I guess a PPL, right? AAPL, if I can think of it. There we go. Okay, and what we have in Apple, this thing really looks like it's, certainly had enough volume the other day. It had 42 million shares. As it's getting back into this candle at 505.75. So you'd probably look at a fairly decent test of a gap that's been open here for a long time. So actually look at here and see that there's a smaller gap out here at about 505. Pretty much disappears with this kind of strength. But yeah, that's going to be the next signal on this thing. Of course, you do have a ABC down in this that would project down to $395, $398, something like that. 505.75 is our next test spot. Certainly had enough volume in it on the 6th of December out here to come out. And of course, we're going to have lighter and lighter volume the next few days. You probably look at 505 being at least a support level over the next few days, depending on what happens on the fiscal. I wouldn't even call it a cliff. I think maybe it's all been in the news long enough that I think what we have is a market that's being held up mostly by the Treasury and by a few companies out here working very hard to distribute stock as quickly as they can. Again, you can give me a call at 877-927-6648. We're going to look at a few more of these stocks if I can actually get to where I'm at here. Scans and Apple Parts. Wanted to look at a few others because I haven't had a chance since the show to do it. When we look at Apple, I want to always look at the supply chain for them, with the exception of ARM Holdings and probably Qualcomm, who will win no matter whose actual device that anybody buys. A lot of these, like Skyworks Solutions, are showing that we're looking for lower volumes ahead. When we see things like Amazon's 9-inch tablet available for $250, are people really going to be willing to spend twice that much to buy the Apple product? It ends up being, I think, a market that's getting more and more swamped by low-dollar Android devices. Skyworks pretty much in Apple a lot. I think we've seen that move down from $31 suggests that we have a good chance of testing 1921 out here, which is the previous November 5th low on it's a fairly decent volume out there. Got to test that low, I think, before we're going to see a low in Apple also. We'll be back in just a minute. Give me a call, 877-927-6648.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to tfnn.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
This segment is brought to you by TFNN. Test drive all the newsletters for free at tfnn.com.
And we come back. We were looking at Skyworks Solutions. Still looks like a 1921 out there. I was just checking the snooze to see if there's anything else going on. We're starting to pull back a little bit in this marketplace, but I don't think that that's anything new. 14, 18 on the S&P cash as we speak, basically unchanged. 2.1 billion shares. That's a huge eye-opener with an hour and, 6 minutes to go. We're going to be watching an extremely light test of these tops. Again, we've had 3 days or 4 days of light volume as we push these highs. Could you break out? Yeah, but my suspicion is that we are going to have kind of a down day on Wednesday. That may set the low between now and Christmas. I'm going to probably start lightening up on positions over those couple of days on shorts. But to me, the long-term path of least resistance is still down and probably going to be down from probably for the first 3 months, 6 months of next year. It's probably going to take that long for everybody to figure out what's going on when you get 400 pages of new tax regulation. it takes, just a long time to figure out what the ramifications of those are, what you're going to do, and until you get that done, a lot of times you're not going to make any business decisions or spend a lot of extra money. And with Europe being in recession already, I don't think that there's a lot of belief that we won't follow them into it. I already see, something that scares the daylights out of me, and I know it's anecdotal. But when I see gas wars happening, 304, by the way, on the way to work here today, and I start seeing gas start hitting under $3, I think that there's two things that can happen. We could have a momentary dip, and probably the best thing out here is gas prices get lower, and it's almost like a tax subsidy out here. But we could see the pullback actually create a bullish story for the economy if we could get crude back down in that $65 range again. So we continue to see a market, and I think we certainly could see $65 crude. If this busts at $82, I don't see any problem that it wouldn't have significantly lower to go on that test back in the 62s. Anyway, when we look at Skyworks, we want to look at TriQuint. These are two of the weaker ones. Both of these have set up what looks like decent ABC downs in the market, and at least tests of the previous lows out here on the lowers. And I think we've got enough time to get a caller if we can get somebody to type it through. Oh, he's typing. Maybe he's typing something. Maybe he's not typing something. We're waiting because I've got about a minute and 30 seconds if someone gets through. Bill from West Palm, Netflix.
All right. How you doing?
Pretty good.
Listen, it's a fantastic thing, this Netflix. Every other day, they got me a pins and needles. First with the Icon, and then and now with the Disney World thing,
Yeah.
And that's going to go through for about 2 years, I think.
Yeah. Have you ever read Remnants of a Stock Operator?
No, what is that?
You've never read that?
No.
Okay. It is about the premier stock operator of all time. It's a guy that was born, I think about 1885, something like that. Ended up going to work in what were known as bucket shops, which were kind of like little parlors that were hooked up with the telegraph to the stock exchange.
Yeah, and is he like the CEO that we're talking about?
Huh?
Is he like the CEO that we're talking about?
He is, and I've got 3 books that I recommend in my newsletter every day. It is Remnants of a Stock Operator. And if you want to know that there's no difference between what happens today and 100 years from now, it would be well worth it. Also, he tells you exactly how it's done. But Remnants of a Stock Operator, Reminiscence of a Stock Operator.
I can't stand that guy.
You got to get that book and read it, and you'll really understand it. We'll see you later, Bill.